Hi, Jonathan York from Bay Financial Partners. Looking at the investment markets. US market's still very choppy out there. Obviously, inflation is still running rampant, and it's just a question of how aggressive the Fed is going to be in hiking rates. Our current target rate for Fed funds is 0.75 to 1%. And with the year-end sort of consensus being around sort of 2.5 to 2.75. But what is really interesting is that over the last couple of weeks, the 10-year note, which is the sort of the benchmark interest rate in the US, has backed off from above 3%, currently trading around 2.76. So that's a 25 basis point fall in a rising interest rate environment, which sort of doesn't quite seem to stack up. Maybe potentially the market was getting a little bit ahead of itself. But also as well, obviously there is a feeling that inflation may have peaked and will now gradually start to sort of fall over the next sort of 3 to 6 months. And what it does make quite interesting is that the sort of next earnings season, which is only around sort of 4 to 6 weeks away now, with the backing up of US equities to some pretty major levels, especially in the tech sector on the NASDAQ, it would be very interesting to see the earnings sort of guidance coming out. Because certainly some of the valuations at present look pretty cheap. And so far, very little has come out of Davos, the big sort of economic forum taking place presently. Still dominating proceedings is obviously COVID. You've now got a new sort of virus out there, monkeypox as well, which is causing a little bit of angst out there in certain countries. And obviously inflation, in the US now, certainly in California, for a gallon of fuel was coming in close to $6. But all the time, the US economy sort of spurred on by the sort of consumer, which still has quite a bit of disposable income out there, is sort of grinding on, and it's still in reasonable shape. Obviously, the war in Ukraine is still having a pretty major impact on oil. That's trading back above 110 bucks a barrel now. And at present, it looks like this could be a long drawn-out conflict because there really doesn't seem to be a way that President Putin can sort of extract himself from this with any sort of dignity. He sort of made the call, he's in there, and really has to try and see it through to the end now because at present, I'd say he's being frustrated and really humiliated at almost every turn. In the UK, fresh allegations and fresh pictures coming forward now of Prime Minister Johnson at these parties that supposedly he didn't know he attended, and then he sort of came out and said there wasn't any drinking, etc. There's been some pretty damaging pictures coming out now, and again that could be very embarrassing for him. And Europe, as we start to head towards the sort of summer months, again, sort of quite interesting. Inflation certainly having a pretty major impact out there. But hopefully with the restrictions of the borders now being relaxed, and getting back to a more sort of normal sort of world, if you like, hopefully the European economy can sort of pick up over the summer months. Now in Australia, as expected, Anthony Albanese is the new Prime Minister. Although it looks like his Labor Party will be reliant on independents really to get any major sort of policy changes through. Because certainly there was a big shift away from the two major parties. Potentially that sort of leads to a bit of sort of consensus politics, which really makes it very difficult to get any major sort of policy changes through. Here in New Zealand, the government's still facing quite a bit of criticism from the fallout from the budget, really not really seen as doing very much, and sort of a band-aid sort of approach. Many people view the budget as sort of a light sort of sugar rush just to give a little bit of a boost out there over sort of a 2 to 3 month period with that sort of winter payment, cost of living subsidy, if you like, of $350 for workers that earn less than $70,000. Now, the Reserve Bank does meet today and expected to increase interest rates again by 0.5%. That'll take the OCR to 2%. With house prices already starting to fall, you'd expect that to just exaggerate that sort of move downwards. But overall, over the last sort of 12 to 18 months, I'd still see house prices maybe sort of 15-20% higher than they were. But certainly the resets on the mortgages are starting to bite now. They're sort of coming off rates of around sort of 2.83% and being reset now at above 5%. Now, the government has announced that New Zealand will remain in level orange on the sort of COVID restrictions. And it's just going to be very interesting now as we head into sort of the winter months to see just what sort of impact that has on the sort of ski fields and tourists coming through. Hopefully, they will see a big pickup, and that'll be a further little boost to the economy. Because certainly at present on the opinion polls, the government needs a little bit of good news out there. It's still sort of falling in the polls. Now again, a good time just to check those KiwiSaver balances to make sure you've contributed enough to get the maximum government contribution. Now, if you are looking for income options, although interest rates are increasing a little bit, there's still plenty of alternatives available out there. You can go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.